Berlin and former Director General of Market Infrastructure and Payments of the European Central Bank. Ulrich is an economist. He has a wealth of experience on monetary policy from the European Central Bank perspective. Before that, you were in the Dutch Bundesbank. Of course, you lived the financial crisis, and you've been responsible with a very high role to stabilize the interbank market in the European Union. I had the chance to meet you many years ago, and I think it was in 2010 or 11. And actually, it was quite an interesting encounter because I had this idea to create a firepower for financial crisis, recapitalization of banks. And then I remember we had this interaction, and it was very useful, in fact, of what the ECB was doing back then. And in reality, back then I was still at the Center for European Policy Studies. I was hoping to have Karel with us today to listen to you, but this is recorded, and certainly if he's interested, he will listen to your speech. So, Ulrich, thank you very much for joining us, and we are all ears to listen to your comments on monetary sovereignty. Please.
Hello. Yeah. So thank you so much, Rin, for inviting me to this. And yeah, the last 6 years I spent then in plumbing also. I did payment and market infrastructures. And that is also relevant, of course, for the topics of global money. And yeah, one of my current projects is to write an entire book with the co-author on monetary sovereignty, which is a very broad topic. I mean, you can almost, cover every element of money through this perspective. And yeah, it's also not a very new topic. So just to go back a bit in history, I mean, today, we still hear often that electronification of money, undermines borders and sovereignty around money. But it's an old topic. Already in 1971, a Harvard professor wrote a book called Sovereignty at Bay, saying that today, in 1971, you can no longer control borders and money is circulating without border controls being effective any longer. And then 20 years later, the former CEO and chairman of Citicorp wrote a book, Twilight of Sovereignty, where he says exactly the same. So we are now living in a world which is an electronic network at the speed of light, and nobody can control that any longer. And that includes, I mean, his book is mainly also on finance and money. Now, let's move directly to today, and just a few now illustrative aspects of monetary sovereignty, and we will see it in more detail. It has a domestic component and an international component. And here one element, primarily domestic, is the disappearance of cash, of central bank money in usage. So yeah, I mean, this is just statistics from the euro area. You can see that within 8 years, from 2016 to 2024, the share of cash at the point of sales has gone down from 54% to 39%. That's at the point of sale. On top, you have the decline of the share of the point of sale and the rise of online payments. So the two effects together mean that cash usage is already below 30% in Europe. And in my last business travels to London or to Switzerland or elsewhere, I no longer change money. I think none of you is changing money. You don't need cash. You need Apple Pay and whatever is behind Apple Pay. No, so there's a quick trend there, and that raises, according also to ECB President Lagarde, the topic of strategic autonomy. So it has an international dimension because the dominant providers in retail payments are all a few US companies with an enormous market power that they, of course, will happily abuse if they have it. Yeah, a lot of people are writing about that. So that's a book just appearing a few months ago. I'm just quoting, something from that book. I think some of those formulations are a bit exaggerated and spectacular, but this is how people, see it, that CBDC is also a matter of global, competition now between the major countries. Another example, again, in the field of retail payment. So Brazil was very successful in regaining sovereignty, if you want, over retail payments by introducing PIX, a retail payment solution based on commercial bank money, a bit the same what the Indians have managed with UPI. So, but the Americans don't like it. They discovered that. And of course, here the US Trade Representative, pointed at that and said, this is not okay because it's a kind of, undue advantages to government developed electronic payment services, of course, in direct competition to Visa and MasterCard. And yeah, of course, Lula doesn't accept that easily. So he even calls the PIX patrimony of our people, although it's only very few years old. And we cannot, of course, forget the crypto community in a narrow sense, the Bitcoin people. So if you go to social media, there's a constant flow of, I would say, wild statements on Bitcoin, and that Bitcoin would be about sovereignty being regained by the people, which I personally would reject. I think it's something very different what Bitcoin is about, and it's certainly not in the interest of sovereignty in the way I will define it, which is the ability of the people to take decisions as a community and to control, let's say, in the field of money, what's going on, where Bitcoin is, of course, the opposite. It is undermining all the achievements in terms of controls of illicit payments, and it's also a speculative bubble that is created, and that in the hopes of those who hold Bitcoin will continue for a long time and make people rich. Yeah, and stable coins, the let's say more conventional form of crypto assets. Maybe the term crypto assets doesn't fit to that. So stable coins such as e-money, electronic money, if you want, issued by a narrow vehicle into a blockchain. And here there's this vision of the Americans, Trump administration, to have them circulate internationally, generate monetary income or taxable income, generate a demand for treasuries, and strengthen the role of the US dollar internationally. So a lot of topics are ongoing in monetary sovereignty. And yeah, then what is sovereignty? How can we define that at all? So we go back to the general topic of national sovereignty first, because the way I would approach is monetary sovereignty is a subset of national sovereignty, or in between is economic sovereignty. So national sovereignty is an old topic in, the Greek philosophers already, worked on what the state is and what state authority and legitimacy means. But the term sovereignty itself comes from 13th century France. And the one who really, let's say, made this term common is a French lawyer called Jean Bodin, who wrote one monumental piece, which is this six books of the Commonwealth, Six Livres de la République. And here he has one chapter also on sovereignty. So he really, gives the definitions that every book on sovereignty still quotes. So sovereignty is a principal foundation of any republic. It means supreme power over citizens and subject, unrestrained by law. it is by nature absolute, perpetual, indivisible, imprescriptible, and inalienable. So yeah, but he doesn't, what is important, so he's often portrayed as having created this vision of an absolute state and making the monarch to be at the center of everything, but it's not true. Even Baudin already doesn't consider sovereignty as a goal in itself, but the first goal, le premier principal but de toute république doit être la vertu, rendre les sujets bons et vertueux. So there's a final objective also of sovereignty, which relates to the people, yeah? So the people are the subject for which you want to achieve something. Then there's all this evolution of the term, of various usages, and maybe just on Rousseau. Rousseau is associated with popular sovereignty. So to clarify again, I mean, while Baudin made clear that the people are the, at the end, the object, let's say, of sovereignty, making them good and virtuous, but Rousseau and others stress that they are the ultimate sovereign. The people are the ultimate sovereign. And for economists, that's a very appealing concept because, you know, if you read pure legal treaties, as an economist doesn't speak too much to you because you're not interested in legal principles per se. Economists are interested in social welfare of the people somehow. So for an economist, popular sovereignty is really the variant to connect with. And that's what is being done also here. So at the end, it's the citizens in this interplay of all the parties. So that's all the public. So here's the public sector. Here are the private sectors. Here are the foreign states. And at the end, we talk about citizens as subject and object of sovereignty. And yeah, state sovereignty, I would say monetary sovereignty is best understood as a subset of economic sovereignty, being a subset of state sovereignty. And then two important distinctions. One is domestic international, and the other is sovereignty of the state or of the nation or of the people. Nation and people are used interchangeably. And as already mentioned, we go for the people this and not the state, and that makes quite a difference. So that's how we define monetary sovereignty, the freedom and ability of the people to effectively govern themselves, such as to decide and implement the best policies in their present and future interests regarding the creation and the usage of currency, including unit of account, means of payment, store of value, so comprehensively. And yeah, again, it stresses the element of the people and their ability to decide. And then one can distinguish domestic and international. And we do it in a way to say domestic just means that sovereignty is not impaired for reasons originating within the territory, and international is what origins from outside the territory. And that doesn't overlap then. It's defined in a way to just add up to total sovereignty. Yeah, the standard definition of monetary sovereignty in the legal literature, I mean, refers to the state's ability to, and then lists, you know, different things in the field of money. And yeah, I would say this definition has a weakness that it overlooks the link between the people and the state. And if you have an impaired democratic and legislative process with a corrupt government, which may be effective, which may, you know, tick all the boxes of this definition, that it is able to exercise all these rights. If the government can do that, that doesn't mean yet that it's in the interest of the people. So that's not a popular sovereignty approach. And in the field of money and payments, that's a very important distinction because in the field of money and payments, it's a network industry, you know? So you always have a few very powerful players. And those powerful players have money and an interest to interfere with the government, with the legislative process. So example, market power in the US of card firms and resulting card fees is higher than in Europe. So presumably in the US, the ability of the big companies to influence legislation is strong, so that the merchant fees end up at a very high level, paid, of course, by the consumer at the end. So because this industry is concentrated, I mean, look at the market valuations of the big companies. They have, they have market power. They can earn this stream of profits, and they have the firepower, therefore, to keep it like this now and to suppress competition if possible. So this distinction between the state and the people is very important in monetary sovereignty. Yeah, I mean, there's one of the, let's say, gurus of sovereignty is a guy, Stephen Krasner, an American, I think, political scientist. And he has defined, also given a lot of definitions of sovereignty, but I don't need to go to the detail why, yeah, those definitions are not so clear-cut or they're overlapping. And then, yeah, the question is, in which fields, can you then zoom into questions, specific questions of monetary sovereignty? And here are, I think, 10? So it's the question of money issuance, the question of the unit of account, means of payment, store of value, monetary policy and convertibility. That's the entire macroeconomic question, no? Do you go for fixed or variable exchange rates? Makes a big difference on the transmission of foreign developments into your domestic monetary sphere. So how can you shield your domestic economy from shocks coming from outside? So there are lots of macroeconomic questions, of course, which are part of sovereignty. Then the question of the lender of last resort and the international lender of last resort, question of international currencies, the current, struggle, will the dollar dominate, or will someone else come in, or will we have a multipolar solution one day? Financial market infrastructures, yeah. Again, because of network effects globally, you have CCPs, often playing a global role. You have international CSDs, so you have lots of global structures, or you have specific solutions like CLS Bank, covering the world. So for all of those global infrastructures, the question is, where are they located? Who has control over them? Then, of course, a big topic in sovereignty is preventing fraudulent and illicit payments. Illicit activities, criminal activities are by definition the opposite of sovereignty, So, and as many illicit activities have a payment lag, I mean, there are mafia structures where, you just pay or you don't pay, you have just IOUs and you just, compensate via IOUs. But apart from that, payment of illicit activity is very important. So controlling illicit payments is very important. And there the entire current crypto developments is the opposite. Now it's going in the opposite direction of controls of illicit payments. Therefore, another, I would say, very big topic. And last but not least, okay, cybersecurity. Everything is digital now, and there are, industrial scale capacities of cyber crime, including cyber warfare, built up in certain countries. So, and that's by definition the financial system. The monetary system is purely electronic those days, so it's extremely vulnerable. Another big topic in sovereignty. And why is monetary sovereignty so important? I think any aspect of society which requires collective decision making requires sovereignty, And money requires collective decision making because it's a network good, So it is a good which, left on its own, it has natural monopoly characteristic, public good characteristics. So it always leads to concentration. And if you leave it to the private sector, this concentration creates abuse of market power issues and creates strategic dependence issues and dependence on foreign actors issues if the dominant players are not domestic ones, but foreign ones. So that's why money is one of the fields in economics or in society where there's a lot of collective decision-making necessary, and therefore sovereignty is very important. Yeah, in more detail, you can then split it up into income generation, microeconomic objective, macroeconomic, information advantage and data protection, vulnerability to hostile foreign actors. So those are then 5 fields, you know, where monetary sovereignty is relevant. Example, income generation. Yeah, the battle for seigniorage income, for global seigniorage income. If US stable coins circulate massively everywhere, that generates monetary income for the US at the expense of other countries. Let me skip that. Yeah, I mean, of course, there are fundamental attitudes towards monetary sovereignty across the political spectrum. So to start with, in the narrow field of money, you could say there's a long debate between Austrians who maybe dream up or, I don't know, have good points on money being left on its own and being spontaneously developing. But the big counterplay of that was Gustav Knapp, with his state theory of money. And I must admit, I read his book for the first time just a few months ago. And I thought it's a good book, you know. It exists in English, and it's a bit annoying to read. He creates a lot of definitions, and it's not easy to read, but I think it's good. And he explains why money at the end is not Austrian, or will not Austrian, you know. Spontaneous money will not be good money. It will not stay there. At the end, money will always be, or the perfect money is unbacked money, fiduciary money, as we have it today. And he already explains why this is necessarily the end of the evolution of money. Then you have, I would say, more the today's, let's say, variant of it, not really variants, but today's, let's say, people who stress the state's role in money. One variant of it are the sovereign money initiatives, you know, who wanted to use CBDC as an occasion to end banks' ability to issue money, no? And there were some initiatives in Switzerland. There was a referendum on this, that, you know, to prohibit banks to issue any money any longer. So those are extreme attitudes on domestic monetary sovereignty. I mean, the liberal economists are those in between, maybe like most of us sitting here, having a balanced view. Then you have libertarians. I mean, Hayek's 1976 book, that's his Austrian idea, that money should be left on its own. Would be much better. And then you have, of course, nationalists or mercantilists, which you have now again, which would you know, prefer the to have 2% growth at home and 1% growth in the competing economy than to have 4% everywhere. So that's mercantilism, and we have it again prominently. So let me go at the end very quickly through 10 topics. I'll go very quickly. Specific topics, how to face the challenges of today. So very quickly, vanishing use of cash and thereby of central bank money. The answer is issue central bank digital currencies, and not to push out the private sector, but to preserve the role of central bank money, preserve the coexistence of private and public money, which worked pretty well, and there are good reasons to have that. And I mean, me defending CBDC, I always say it's an absurd idea to ask the central bank to be the only one sticking with paper in a world where everybody else has moved on to electronic means of payments. And then the people who say, what do you want with CBDC? We have already Apple Pay, that works fine. Of course it works fine because the central bank has not moved in technology, but the coexistence remains very important for various reasons. Then, the dominance of global large retail payment instruments. One way is CBDC to limit the market power of those. But another one is the Brazilian or Indian approach, which were very successful. in promoting a domestic payment instrument based on instant payments, and where the government, however, imposes certain characteristics to ensure that merchant fees are not abused, that they are low. The Indians have taken the most radical approach. The merchant fee under UPI is 0, and the banks have to do it, have to distribute it, have to help distributing it. And yeah, it's fantastic, I would say, from a people's sovereignty perspective. Yeah, then, I mean, public blockchains and illicit payments, I think one has to rigorously restore KYC, AML, CFT. One cannot have a blind eye on public blockchains. No, there's no point. I mean, I hear so many stories of people who have difficulties making international payments via banks because of AML, CFT, and the banks being extremely prudent and afraid, of legal fines. Just the latest one is the BNP Paribas story on Sudan. No, so your legal exposure is gigantic, and therefore the banks are very reluctant. No, but that of course undermines competition in cross-border payments, makes them expensive with banks. While yeah, in blockchain, there's no regulation. So of course, then regulation is not effective because the bad guys anyway do it on a public blockchain. And so there's no way out, that this has to be addressed. Or maybe we just give up any regulation on illicit payments, then we are consistent at least. But I would say it's better to rigorously, go after public blockchains and seek solutions. And nobody should say it's not possible to find solutions. I think it's a deliberate choice to not go against them. Economic rise of the global south, yeah, that was already mentioned today. Revisit the options of a more symmetric international reserve currency order. It should never be given up. Yeah, general ICT progress, cross-border payments. I mean, the G20 has seen that there's a lot of progress needed on G20 on cross-border payments. So there's a lot of scope for international standards, for interlinking fast payment system. So there the BIS, the CPMI, the IMF do a lot of good work. Last two bit different topics, high public debt levels. Yeah, if you are over-indebted in a certain way, you have issues of fiscal dominance, of monetary policy, distributional conflict, risk to sovereignty in the form of sovereign default risk. So just not to forget this topic, in Western advanced economies have all taken a fiscal path, which is not necessarily sustainable. And yeah, if governments default, the monetary orders also will not work. So you have a lot of destructive dynamics you create, and that's also something that has to be accepted as a challenge for the next years. Last but not least, decline in democracy. If we focus on popular sovereignty, then this is a serious issue. So according to the Economist Intelligence Unit's Democracy Index, in 2024, we registered a decline to a historic low. And that's, I think, an undeniable trend, which should also worry us, which is on this list, even if it goes beyond the narrow field of monetary sovereignty. Okay, I think that's it. Thank you very much. Yeah.
Thank you very much, Ulrich, yes, for your presentation. I don't know if there are questions I see already from the floor. Sami?
So great presentation, a lot of philosophy. But it's nice. So just a question, and you raised, I think, is it the project of CDBC doomed? Because as you've been talking about this fast payment system developing, and in some region the interconnection of this fast payment, especially in Asia, and also this stable coin was becoming mainstream now in the US and many other countries. So why we are talking about CDBC now? So this is one question. The second question is about, you talk about monetary sovereignty, and there is, I think, 8 criteria. And do you think that if a country decide to peg its currency, the country lose its monetary sovereignty with having all the other criteria relevant, still relevant?
Can I reply? So, but I have to remind them that's the problem. So if I can very quickly answer them. So on CBDC, yeah, there's a lot of pushback. So the BIS, you know, does a regular survey, and the curve of number of central banks who are saying they will introduce CBDC has started to fall again, because I think the pushback from the industry is gigantic, no? And we currently face it also in Europe, where it's not easy to get this through the parliament. So yeah, I would say let's see, you know, if one country goes out successfully, and the alternative solutions, I think whether stable coins are very suitable in retail payments, I have my doubts, because if you want a central ledger is the more efficient way to settle mass payments if you don't have a specific reason for decentralized finance. So, of course, you know, Bitcoin blockchain is a miracle that this thing, you know, is stable and works. But if you have just a concrete and you have no reason to create a DeFi network, then centralized ledgers are efficient, no? So stablecoin, you know, why would you use a blockchain for the standard retail payments? Maybe, but it's not so obvious. For me, the main topic in retail payments are the Indian, the Brazilian approach of a government-sponsored solution using commercial bank money. I mean, that's the sort of alternative to CBDC. You have sufficient control that the public interest is kept, even if this solution becomes dominant. So if it's a purely bank-owned solution or so, you know, also banks will collectively abuse their market power. So the government has to have some control, but it could be in commercial bank money still. Then you have less of the drama about, you know, public money taking over, as some would say. Yeah. And your second question was the 8. Can you repeat the second question? Yeah, the exchange rate. Yeah. No. Yeah. No. It would be too easy to say fixed exchange rate means loss of sovereignty, because I would say the constraints, if the shock transmission internationally is more subtle than that. No, if you have variable exchange rates, you can also be exposed to international shock. So I would say the entire literature on optimal exchange rate regimes has to be looked at before concluding that one is better for sovereignty than the other. No, so yeah, I mean, it's not a simple answer, and some have said in the literature that discretionary elements is a difference, though. That discretion means sovereignty in a certain way, but question mark, because as economists, you think through what discretion means. If it's pure randomness, okay, but is pure randomness sovereignty? Also not clear, yeah? So it's not an easy answer, yeah?
Yeah, okay. We were actually having an interesting discussion of sovereignty just before your talk during the break, and in which Elise asserted that sovereignty is the assertion of power on others. And I asserted that sovereignty is capacity to act independently and optionality to take choices in your best interest.
Yeah.
So that's one. And two, I'd suggest that there is a wrinkle that you're going to have to address, which is that China has broken its monetary sovereignty into two components of money. Gold is for the store of value, and renminbi is for current transactions. And it mandated that all Chinese banks, I'm checking the exact year, but around 2012, 2014, mandated that all banks enable their customers to have gold aggregation accounts where they could use small amounts of renminbi to save in gold. And those gold accounts are 100% reserved with physical. So you don't have bank instability risk or credit risk. And that has been driving, to a great extent, the gold accumulation in China. It's not happening at the state level, where, of course, they are aggregating reserves, but at a fairly steady 2 metric tons a month. And it's happening more at the retail and commercial level, where there's been an appreciation that there's a shift because of the loss of trust in both US, UK, EU, Japan, everywhere that, as you say, is over-leveraged. And so it's actually the fiscal dominance is driving a bifurcation monetary policy in China, and they have recently, of course, invited central banks and others to reserve in gold in Shanghai and Hong Kong. And they are building the vault network out globally so that they will also have vaults in Saudi, Dubai, Indonesia, Malaysia, to broaden global participation in gold.
I mean, my interpretation of gold, I mean, why would a country like China now go into gold? Store of value. Let me give my interpretation quickly. I mean, store of value, you can call it store of value.
The reason,
but the big,
there's a very specific reason why China is doing this. Yuan is soft pegged to the dollar. In order to maintain external trade stability, People's Bank of China maintains the soft peg. So instead of yuan appreciating as the dollar declines, as everyone expects, the yuan declines with the dollar because of the soft peg. And that, knowing that they were going to adopt that as official policy, led to People's Bank of China and the Ministry of Finance reinforcing the importance of public saving in gold as the store of value.
Yeah. Okay, and I have one more. That's if you have a huge, and that's not necessarily in your point, if you have a huge cross-border net financial position and you live in a world where you discover that the world geopolitically is deteriorating and your foreign assets are not safe, they can be frozen, for example, if you do bad things, then you prefer, settlement in gold and repatriation of gold. And, even the Germans have started to repatriate gold, because that's the trend those days, that you don't trust the rest of the world. So if you are a country with a net foreign claim position, you start discovering that you like gold and gold physically in your own place. And that, I think, is what's happening, no?
Things every month. And the tick data hasn't been published this month, but China has been very steadily reducing its exposure to US treasuries as an asset class because they got stabbed in the back in 2011 after buying 2 trillion of them by quantitative easing, which sank their value. And of course, the long tenors have lost a huge amount of value. They value financial stability, so they're not dumping them, but they are reducing their holding steadily as their portfolio matures.
With the portfolio now,
It's about 740 billion. I can tell you what the reference number was, but it's stale.
so so going back to sovereignty, so my understanding of it is that monetary sovereignty is becoming to be like a myth because of US dollars domination in the global markets, and also, as you mentioned, of the digital transactions are making the transmission mechanism so quickly and effective. And the paper I was discussing yesterday by Francesca, it was about also like the impact of the monetary policy on the interest rates, and in the UK, I mean, the the main conclusion was that in the UK, the US monetary policy has a better impact of the UK's monetary policy. And if you look at the trilemma, impossible trilemma, okay, we have free movements of capital, we have exchange rate that is not a peg, and a floating regime, but then you don't have the monetary policy. And my question is about, okay, and also the discussion, the keynote we had yesterday was, okay, we're moving and shifting towards a more multipolar system, and this hegemonic stability is actually going away. So do you think it means that we are in terms of monetary sovereignty, we're gaining back in monetary sovereignty if we shift from like a dollar as an international monetary policy, international money, towards a more multipolar system and with different currencies? Is it good news for sovereign?
I mean, of course, I mean, if you say monetary sovereignty is the ability to take decisions which are in the interest of the people at the end, then a more multipolar system to which you would switch has to work well, no? Some people may say, this will not work, and the hegemonic regime is the one that works. So, of course, if you try then a multipolar one and it doesn't work, then you haven't really gained sovereignty because you haven't helped, you haven't improved things. But apart from this theoretical, consideration, I would say by definition, if you have a system with a governance where everybody's involved, and like in monetary union in Europe, you have now a governing council with all those countries being represented, then you would say that's more compatible with sovereignty. It's a democratically chosen solution to reap the economies of scale of one currency or of an international currency taken consciously through a contract. So that has more appeal, but it has to work. If it's a disaster, then question mark. If you didn't improve things for people, you have a question mark whether this is sovereignty.
Hi, thank you. It's a very interesting presentation. I have a question. I want to take your views about possible future scenarios, because at the moment we see the EU is going down the central bank digital currency and the digital euro. The US is going the stable coin, and this is risks for market fragmentation, problems for interoperability, and the cost that can be added to international payments. So do you see a future scenario where central bank digital currencies are going to be dominant, but from what you say, probably not? Do you see more a hybrid private public model, or do you see a tokenization stablecoin model to become dominant? What's your intuition on this?
Yeah, there are indeed those different developments, but it's impossible to predict, no? I mean, the US has taken the radical no CBDC approach and promotes its stable coins. The EU is still, aiming at CBDC, but who knows, when and how it comes. And then there are some like India and even Brazil and China who all continue to working on CBDC. So I think there's some momentum there, even if it's not very prominent, maybe. So where will that all lead? I don't know. I can say what I believe would be the right thing. So again, for me, the preserving coexistence of public and private money for everyone makes sense. So I would say yes to CBDC, and I would also say yes to to improving conventional payments, which in domestic terms means instant payment in commercial bank money with point of sale and e-commerce solutions being worked out. And some say, yeah, but what do you want, CBDC or this commercial bank? So I would say both is fine, because electronic payments is such a gigantic market, and the fact that banknote usage disappears means that this market grows. So the central bank doesn't cannibalize the market. The central bank moves into this market because what has been previously paid in cash is now paid electronically. So it's a gigantic market. It's not overcrowded by having a commercial bank money based solution and CBDC. And in the international sphere, I mean, we have, I would say, correspondent banking as a solution to international cross-border payments has a drawback of being a business with big network effects. So a few big players dominate the market and the costs are high, therefore. So how to bring competition into this market? So first would be governments have to ensure legal certainty and feasibility of implementing AML CFT without huge legal risks, no? Then naturally, you know, more players go into this market and compete. You need competition. And you know, what's happening again now is BNP Paribas is a bit the opposite, no? For those big banks with huge capital, who can end up with enormous fines, you know, they will exit those markets and that's it, no? And of course, you can have small fintechs who will do it because they have less capital, they have a bit less to lose. But competition is essential and legal clarity, I think, because technology is not the problem, no? I mean, electronic communication is free. So what matters in cross-border is that you have different jurisdictions, different laws, and special compliance requirements, and that makes it expensive at the end, no?
The non-regular economy, even we know work, speak about 30% of people not working in the next 5 years. What do they do? So, it goes back to the main question we have on that. We disagree with what is really basic. Why asking for national sovereignty of power? Why do you also feel that the agency nicely defines it? It is exactly the debate between Jean-Jacques Rousseau and Voltaire. Are we good or are we basic of us? So if you believe that the logic that figures, those are the things we want to be together to fight for the good. So yes, you can find maybe a way not to go to power. But if I was French and I believe in Miller, or speaking about more of the time, then I would know that, and for me, national sovereignty was about power. And all what you see that is written is that national sovereignty was about. So it is two very different ways of looking at people, okay? And what we have, when AI comes there, I wanted actually to hear on another that release that like experience here that we will be aware of so like
Sorry, your question was on the BRICS, the BRICS currency, yeah? Yeah. I mean, I have read there's one document now which describes this vision of the BRICS. But if you look at it, you know, I don't get very clever from it, I must say, what they really have in mind. So I don't think it's very close to something real. And I mean, if I think about the BRICS, I mean, the one country that can offer something there is China, no? And therefore, for me, BRICS is a network which helps, you know, a possible new hegemon called China to become more relevant, and the others are a bit at the periphery of that. No, so also for currency, I don't see a BRICS currency. You know, I see the Chinese, you know, playing a bigger role over time. At least, you know, from this BRICS document, I couldn't find anything meaningful. What could happen?
I think we agree. 5 years ago, a Russian economist, Sergei Glasiev, published a paper suggesting a BRICS currency on a basket of commodities and currencies. And they discussed it and they realized it was unviable. So for the last 3 years, if you're a really, really boring person like me and you actually read every BRICS joint statement that issues after their their annual meetings, then what you see for the last 3 years is very consistent promotion of local currency trade, which is the key term now. And that means dealing in your own or your partner's or a regional currency, rather than having to choose a single global currency, which would give a single point of failure for foreign sabotage.
I have one question, which is a little bit provocative. You've been at the ECB many years, and the creation of the euro was, in a way, a loss of sovereignty. So, but then for many years, we've seen some sort of cooperation. Of course, there are some struggles within the bloc, and we've seen it for certain years, especially in the financial crisis, where the whole concept of the PIGS emerged. So my view is, to what extent a loss of sovereignty in monetary or monetary sovereignty or monetary policy would or could be a factor of resilience. So instead of really thinking of sovereignty as a static approach, it could be a dynamic approach where, depending on the interactions over the years, over the cycle, and the experience with the external shocks, it will lead us into a factor of resilience. So loss of sovereignty at its optimality, we could move into a resilient dynamic in monetary policy. And I think if we think statically, we always are stuck into the into the wall, because then you say, okay, we need to regain power, hegemony, and we need to finalize, and weaken all the players around us. But then if you think about it dynamically, and it's the same thinking I've been making on bank regulation. So bank regulation should not be static, it should be dynamic, based on the accumulation and of risk over time. And this is, for me, a similar type of thinking. In fact, not to think of sovereignty as a static element, but really, eventually, it's a precondition over time for our accumulation of knowledge on how to deal with monetary policy. And then eventually it becomes a factor of resilience. So instead of talking about monetary sovereignty, it's monetary resilience. That's what we need nowadays.
I mean, with my definition of sovereignty, the ability of the people to take decisions in their interest, monetary union is fine, no, in principle, because if you convince yourself it has benefits, you take a conscious decision. It's the same like central bank independence, though some people would say that's not in line with sovereignty to give to technocrats, non-elected people, power. But again, if this helps stability of money in the interest of the people, it's an act of sovereignty. The only, let's say, interesting question to be developed is the one, does that always need to be reversible? And one could say as it should be reversible, no? And so it's a very hot topic for monetary union, and I shouldn't say that. But Article 50 now of the EU treaty, says you can exit the EU, no? So in this sense, you have it's a bomb, and if you do it, is it in the interest of the people? Big question mark. But you can do it. So if you are attached to national sovereignty according to today's nation states, and you insist on reversibility, I mean, this box you tick for the EU and for monetary union, and you also tick it for central bank independence. I mean, ECB is very independent, not easy to change, but all other central banks are just, their independence is just a domestic law that can be changed by the parliament on behalf of the people if the people want so.
We leave the Brexit, but we didn't leave yet exit from the Eurozone. So we'll see what this means. So thank you very much for your attendance. And I think thank you very much, Ulrich, for a very nice discussion. We'll continue. So now I think it's
lunch break. We have the lunch break, but before, let's go get a group picture, like one last one, in the same room in our way towards the lunch, because the lunch is happening in the same place as yesterday, in the same room. And we will be back at 2 sharp for the policy session. So we have 1 hour. Actually, we planned this buffer time in the lunch break. So because we are having also some people online, so we want to be on time. Okay, thank you.